Welcome back to Market on Close. Continuing our conversation and coverage after Jay Powell's interest rate cut. Stocks are near the highs of the day, breaking through them. Alan Nuckman is joining us from the floor of the CME. He's the Chief Market Strategist at Agora Financial. So, Alan, stocks continue to move higher here after a little bit of a blip. So, year-to-date stocks up. Looks like they might add on to that. Bonds and gold, however, also up big year-to-date, are down a little bit here on this. So, which trend do you want to go with? What are you interested in here?
Well, I'm still positive and bullish on the market. Let's look at, I'm talking about the stock market, the macro market. And so we've seen, obviously, last week we're within 10 points of all-time highs in the S&P. Today's another comeback climb where it sells off a little bit. People are buying into it, and we want to see it close, obviously, above 3,000 one more time. But the market's had it right as far as the rate cut goes. Now, there was some gyrations in the probabilities. It went from 95% last week down to 60% yesterday, then it was 70% here this morning. I think that was a lot of because of the repo action. But looking further out, which is more important, that's what we do, futures markets. Looking at December, now it's a 50-50 chance, and going out to March, it's only a 30% chance. So the question is, how does that impact the dollar? You saw the dollar bounce a little bit, and I think that's what's putting pressure on the gold market.
Yeah. All right. So then, is it the technical trader in you, Alan, and the trend follower want to say, look, buy the dip on gold, or if we're approaching the end of the
as far as
cycle,
gold goes? Yeah, you want to look at this 1,500 level as a weekly pivot to keep an eye on. Again, it's about the dollar and the dollar's strength. In the big picture, the dollar's had a lot of reason to go down. We forecasted many rate cuts, and it still held its power. Looking at it technically, for 5 years, it's traded between 90 and 100. So we're up near the upper edge of that range still in that dollar, and everybody is having that contest to see who can go lower when it comes to rates. So I don't know who's going to win that fight, but we did see, I didn't look at it here today, earlier this week we made a new low in the euro currency and a higher daily close. Let's see where we are at week's end, but that's really the linchpin is what happens with the dollar. Now, I'm a price guy, but there are other forces, other pressures where people and personalities want the dollar to go down, and eventually, that may weigh on it. That's that chaos that was caused, got us a rate cut. So who knows what can happen from here.
Okay. Now, I think that's interesting, right? Because the point that I'm trying to get across around is there are some things on the long-term trend that are in place, mainly stocks. However, if there is a move that begins today or began last week in bonds or gold and continues, that would mark a pretty big departure. But I'm guessing you'd probably need some kind of follow-through on either the economy getting better or, signals that maybe that was the last cut they're going to do, which they're not ready to do, right? They're ready to say, look, we're going to step in if the economy slows down. We're still here for you.
Well, and you were talking in the last couple of segments, everybody was so overloaded on one side of the boat that rates were going to go nothing but straight down. That's not how markets work.
Yeah.
When everybody has one opinion, there is a bounce back. And that's what we're seeing here in the short term. Let's see what happens when there's, more downside pressure. Again, why are people going to go into treasuries at these yields? That's a question that you have to ask yourself. But look at all the other variables happening around us. The stock market's still strong. The VIX has continued. Last week it got below the 14 handle. I think we're at 14, maybe 15 right now. So volatility has had a sharp decline, and that's been the pattern for the 10 years. We've seen the stock market move higher, and we've seen VIX move lower. Every time it bounces up, it gets smacked back down, and until something changes, that's the path of the progress of the market.
Yeah. All right. Hey, Alan, we had a huge amount of volatility in crude over the past week. I know you're looking at some energy stocks. Right. I want to get to a trade that you're looking at right now because you've actually got your eyes on, what are you looking at, Occidental Petroleum?
Yeah, Oxy. So now let's talk about the macro market. You've seen stocks, stabilize and rally, but we haven't seen that same action out of the energy market. Until recently, it broke out above the 60 level, but it had been depressed and not correlated, whereas in the past couple of years, oil and stocks tend to move in tandem. So looking at Oxy's just a downtrodden stock play. Saw some good action in the fact that it made new lows but did not make new highs of volatility, so the short sellers may be done. This is a stock that's down 25% in the last 2 years, as opposed to the S&P up 20%. So they're seeing some value at that point. I'm looking at Oxy trading between 40 and 50 since August 1, so now 6 weeks, and we're right at the 45 level. So looking at the in-the-money call, a January option has 4 months of time. In the money call, the 40 call, which is below the low for the year. It hasn't been to 40 since 2008. So the 40 call is going for about $6.50. It's $5 in the money, and we could see a little bit of bounce and a rebound in this stock. Then this option's going to pay off nicely. It's a nice little chip to have on a downtrodden, down stock. That could perform if the energy market follows through on this upside breakout.
All right, there we go. Not the first and second day followed through, but look, I don't think anybody expected us to do 15% oil pops in a day, so we will watch. Right now, crude trading at about 58 bucks. Alan Nuckman, nice work, the chief market strategist at Agora Financial. Bonds, stocks, into some energy. We'll be right back. We're going to bring in another trader to join us here on the panel because right now you've got equities at the high of the session. Stocks comfy with a little bit of a hawkish Federal Reserve. We'll be right back.
It's high time to power up your portfolio, explore ways to reduce risk, and take control of your financial future. Join me, Scott Connor, a 30-year veteran trader, as I dissect trading tools when you sell a put that's actually bullish, and show new trader Jenny Horn how to construct a long-term investing plan.
I'm kind of starting from scratch. This is awesome. I've never used trendlines before. I do like the growth stocks. They're like hipper and they're fun and they apply to a lot of millennial traders like myself.
Only on the TD Ameritrade Network.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is,